Hello guys, welcome to EagleStocks, and in today's video I'm gonna show you how I trade and strategies I use to trade. So let's jump on the chart. I have it set up. This is a naked chart of Bank of America. I use the 1 year, 1 day. I'm gonna draw my basic levels of resistance right here. Stops here. We have a better support would be right here, would be more accurate. So you can see here, I've obtained from this chart, it has a resistance around, what is it? Let's say $31, and it has a support set at 29. What? Actually, yes, 29. So we can see here the market has just been moving sideways or consolidating. Was able to break out here, but it was pulled back right away. And once it hit back support, which it was previous resistance, and it dropped, it was clear that the stock was gonna drop because bulls are weak at this point. So that's just the past. We have the same here. We will say more than support is actually right here. Same deal. It hits here, which is support, pulls back. Once it hits the support again, it's gonna drop. I mean, this is support when we're looking at it from up here, and it's resistance when we're looking at it from down here. So you see it drop below support, it head back to resistance, unable to break, back to support, back up again, and it dropped. And this red candle here, it was a sign that it was gonna drop. I'm not gonna use this because it wasn't really much going on there, but I'm gonna draw the next level. So we have support set at what, 28. We have our, I would say 29.50 would be the correct, around 29.50. Let's see, that's where we have the resistance level set. So how did I do my Bank of America trades? I enter here for calls. It went up a little bit. I exit because once it hits resistance, if it doesn't break out, it's gonna pull back. So there is no point of view. You don't want to buy calls here unless you have a clear sign that it's gonna break out, because then it's gonna pull back. Here you can buy puts. Once you see it hits resistance and the stock doesn't break out, you can use your puts. Here just move sideways, so you will have lost money to Thera. And then here, once we're again here, we can do calls all the way to resistance, and then we will exit here. And here you can clearly see this. So it touched resistance once, twice, and 3. But here is the tricky part, because look at it. It broke above, and then it was automatically rejected by a bearish candle that closed almost at the support level, previous resistance. But the next day the stock dropped significantly down, which means that once the stock was gonna hit here at support, it was clear that I was gonna break down. I stopped trading Bank of America around here because I saw that, but in order for a bullish breakout, we had to look at the context of the market. And if we can see here, it's actually, look, will be more clear. We have consolidation, pullback, bullish, but we're still here on consolidation, and we're about to face another pullback. This showing that the market for Bank of America, it's consolidating and being bearish. It has no clear signs of any bullishness, but we're still able to place calls to make money because we can predict where the stock is gonna move on that range. So here it will be really easy. All we need to wait to do is for the stock to perform this way. It will keep going down till one point, we have multiple levels that we can retest. It will be support here. It could be, if you look here, it got support here, resistance up here, which it was previous support here. So once we see this, we can do a bunch of strategies. So let's say this goes here, and then it starts going back up here and it hits here. This is resistance. Once it breaks a little bit, it's clear that it's gonna go to the next level. But once we hit here, it goes up and it drops, and that candle closes below this support, it's clear that the stock is gonna drop. Now I wanted to show you the chart on a naked view, so you can see how just by looking at it with no indicators, we can kind of predict what the market is doing. Next thing, I'm going to add my indicators, so you can see with the indicators how we can have more information about this stock. So let's get to it. Okay, right now, if we look at this, the stock is about to be oversold in this range right here. What does this tell us? It tells us right now the stock is oversold. If we look at the MACD, the histogram tells us that the average has been bullishness. As you can see here, we had a lot of bearish. It's been bearish, my bad. I was looking at this, but I was thinking about what I was going to say. If we look at this move, how big it is, look at it. We have all this bullishness. Look at this and look up there on the chart. So it goes up, 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 up. It keeps going up. It keeps going up. It keeps going up. It keeps going up. And we have that break right here. But here the stock looks like it ran out of gas. And that's when we started seeing those bearish days, where it was just moving sideways. But now, let me see, where did it go? We have these 3 red candles, and then the averages, they cross here, which it made it bullish. It crossed here, where it made it bearish, and it close here. It should cut somewhere. Let's see. We can't really tell. It's not clear yet. But if you look at it, it looks like it went over, and now it looks like the fast average is sitting under. So this, or actually I really can't tell. You see. Let's see if now we can get a clear view. Okay, yeah, it looks like the fast average is under, so this can give it a chance to be in bullish, but we need to look at the context of the stock. And we can really see here how sideways, drops, up, and sideways again, and it looks like it's gonna drop again. We don't need to get a lot of crazy moves to trade options, but we really need to be right on our trades. So here I'm gonna show you how we can trade and how I look at this, because the option chain is the key when it comes. So for example, if I was to study the calls, you see the stock is bearish, it's dropping. It wouldn't make sense to place calls because they are cheaper, that's true, but on the other hand, you're going against the move of the market. The market is not advancing, it's moving sideways and it's contracting. So we will go to the puts. So like we said, the stock was moving between a clear range. Now it's moving between 27 and $30, which is a $3 range, right? So if we're gonna place puts, for example, that are $3 under, like 24, they pay really low delta. You lose the same to theta, So this will be a really bad trade. This will be a bad trade. This will be a bad trade. This will be a bad trade. Even though they've gained 900%, like, it's not a good trade. I will tell you why. Because these options here, they have intrinsic value. This option at 28 put, it's for, you can buy it for 108, and the value on it, it's 108. So you know you're right out of where your money is. And this one pays you a delta of $92 and a gamma of 26. The implied volatility is low at 20, but the probabilities of being in the money is 93%. So that's like really, really high. Because let's say you said, like we said earlier, you wanted to place a put that $3 under. Here is tricky. Yeah, it's gonna be really cheap, but you're not gonna make a penny. But here is the deal. Let's say you buy it at 28. Right now it has an intrinsic value of $1. The stock is at 27, so it's actually here. The option on that range, it has an intrinsic value of 8 cents, right? So we look at it this way. If you think the stock is gonna go to 24, might as well buy the 28, because by the time it moves to 24, that's $4. Your intrinsic value is gonna be sitting here. So your option is gonna be, you're gonna buy it for 108, but when you have it, you're gonna be sitting at $408. So you automatically, actually, you will be making, because he already has one, and when he has 4 more, you will be automatically making $400 just from the intrinsic value increase. That's why it's important to analyze the Greeks, understand them, because like, you can come here and be like, oh, all these calls are cheap because they're under, but like, yeah, but the move is no sign of being bullish. The market is not moving bullish, and like, you will be going against the market, and you will be more likely to lose than if you play it safe and you pay the price for the trend that's currently happening. These type of trades are trades that people do, that they are not doing looking at the market. They're more of like a gamble trade, you know what I mean? It's cheap, whatever, just gonna enter and just gonna see what happens. So as we see here, it can go to that 24 range. But look, if it breaks this support, those puts that I showed you, they're gonna make bank. And then how I will treat this is, I will buy my puts, I will wait for the stock to hit here or any point here, see signs. Once it hits here again, if it doesn't break out, it's automatically that I'm gonna place puts. And once it hits right here, if it doesn't break down, I'm gonna place calls all the way up. And it's simple. I don't know if this video is too long, but I wanted to get straight to the point and show you how is that I trade options. A little bit more understanding. And yeah, if you like this content, you thought it was helpful and you learned from it, don't forget to drop a like, drop a comment on your thoughts. I will really appreciate that to help us grow. And yeah, much love. EagleStocks, I hope you learn. Have a good weekend. Much love and respect. See you in the markets.